Hi, everybody. My name is Megan Crane. I'm a manager here at Dean Dorton, and I run our higher ed practice. And so thankful that you guys are here today. They were talking this morning that if you're a slide counter, that they didn't have that many slides, so you couldn't judge. I have a ton of slides. I have 98 slides to be exact. People are getting up and leaving the room. But what's important is that we are going to go through them pretty quickly, but it's all related to HEERF funding and other coronavirus-related funding. So if we go quickly, I do want to leave time for questions. I'll also try to answer questions as we go through them. So try to keep up. Hopefully it'll be exciting and we'll get started. I broke the thing. Oh, the big green one. You just said green. Oh, there we go. Okay, here's our objectives. We're going to define the requirements around the HEERF funding, including compliance requirements, student grant requirements, institutional funds, allowable uses, reporting requirements, and then general single audit updates, hopefully. I do have polling questions. This is your third or fourth session with polling questions. This is how you get involved. Hopefully it'll help us drive our conversation just a little bit. Here's our agenda: HEERF 1, HEERF 2, HEERF 3, HEERF and the Sifa, the GEAR funds, and student financial aid. I should have $1 for every time I say HEERF today. I'd quit. So let's start with the CARES Act. CARES Act came out in March of 2020, and is more commonly referred to by us as HEERF 1. It was a $2 trillion bill. 14 billion of that was allocated to the Higher Education Emergency Relief Fund, and that was given to each college or university to determine how they wanted to spend the funds. 50% was required to go to students, and 50% was to be used by the institution. Student funding could be used for food, housing, course materials, technology, healthcare, and childcare. The institution could decide how to cover crisis-related expenses, including transitional technology costs, training, and payroll. Basically anything related to the coronavirus. HEERF 1 came out with various sections. 84-425 is the general CFDA number, and there is a required letter after each. Most of the funds were spent out of the student aid portion and the institutional portion, but there were other allocations allowed. So we do have our first polling question. If your institution received additional funds, would you please tell us which one it was? Somebody was very quick to say, I got nothing else. Great. So some people did get some of the other lettered funds, I call them, but it looks like most of you, over 55%, did not get any additional allocations. All right, at the student portion of HEERF 1, again, you all know this well, you had discretion. Who could you award it to? How would you award it? They originally said only students that are Title IV eligible are allowed to receive these funds, and it excluded all distance learners. So if you were an exclusively online student, you didn't get $1 out of HEERF 1. To award students, I think this has been really interesting, is we're working to wrap up, I realize it's mid-May, we're wrapping up June 30, 2020 single audits. We want to know, how did you award funds to your students? Did you do, everybody got the same amount? Was there a threshold? Did you have students apply for funds, or was it a combination of 1, 2, or 3 of those? Yeah, this is where I thought it would be. I thought most people would say, yeah, we used a combination. And that's what we're seeing. Most people might have said, yep, we've got these thresholds, but if you want something more than the $250 we're going to give you, you can apply and you can have more. There's reporting requirements. These were very vague in the beginning. I think what we've seen throughout is that the requirements changed about as quickly as you got the money. It was like, here's the money, here's the change. Here's the rules, here's the change. Here's the rules, here's the change. And we're still seeing that through today. All right, so what have we learned about HEERF 1? I think this is the most important part as we're sitting here looking back to June 30, 2020. Documentation is key. I wish I had a little pinger that every time I said documentation, either we all got a little like alert so it would remind you that you need to document things well. Maybe we could get another $1, add to my HEERF dollars. I think what's important here too is that you all learned on the fly. We all did. You learned on the fly, but what we're seeing is that you're mainly compliant. So good job, pat on the back. I think that's what's important, is that you guys really dug in and thought about it and wanted to be compliant throughout. It was easy to spend the funds. There were major disruptions. Again, it was confusing at the beginning, but there were major disruptions, but in general, you spent the funds on students, it made sense. You figured out what other coronavirus-related expenses you could use it on, you spent it, it's pretty easy. I think what's important here to remember for your audit is that make sure that you have some sort of reconciliation. How much did you get? How much did you spend? What's reported in your revenue? What's reported on your Sifa? Because those don't necessarily have to agree. And making sure there's reconciliations throughout of what came out of HEERF 1, eventually what came out of HEERF 1 versus HEERF 2, but what was spent under HEERF 2 that was HEERF 1. So just making sure as accountants you are remembering to reconcile throughout and have that documentation for us. Any HEERF 1 questions? I told you we were going to move fast. That's why they put me after lunch. All right, HEERF 2. Moving on, HEERF 2. HEERF 2 came out in December of 2020. More money again for higher education. This time it also included money for proprietary institutions. So what's different from HEERF 2 from HEERF 1? It provided supplemental funding. It expanded the allowable use of grants funds. It modified the share of A1 to be used on students. We're going to do a polling question in a second about this. It added allocations for distance learners, so they finally got involved. Again, the proprietary, and then special requirements if you had to pay the endowment excise tax. So here you go, pop quiz. I haven't told you this answer yet. In general, what amount of section 314A1 funds must my institution devote to financial aid grants to students? All right, good job, 73% of you. It's the same amount of your HEERF 1 allocation to students. So what's important here is that the allocations that came out under HEERF 2 in general are larger. So if your HEERF 1 allocation was $2 million, you spent $1 million on students, $1 million on the institution. If your allocation from HEERF 2 was $3 million, you spent $1 million on students, like HEERF 1, and you spent $2 million on institutional portion. So it's not 50-50 on HEERF 2. The student portions, again, you must make grants to students, and then any institutions with unexpended student portion of HEERF 1 could follow the rules under HEERF 2 to make more grants. So you could take HEERF 1 funds and make grants to distance learners. Title IV eligibility was no longer required. That was confusion kind of throughout the whole HEERF 1 process. Title IV eligible, not Title IV eligible, yes, Title IV eligible, no FAFSA, but maybe they could be eligible. It was a mess. And so that was clarified for us that Title IV is, eligibility is not required. There was a frequently asked question about DACA students, undocumented international students, and it said they're ineligible. And then foreshadowing in HEERF 3, they came out and said, just kidding, those people are eligible too. So you can use HEERF 2 funds for those students as well. You have to spend it within 1 year of the date of receipt of the most recent HEERF award. So you had 1 year from December 27th of 2020, but then when HEERF 3 came out in March, you actually got a year from March. So the difference here too is that you are required under HEERF 2 to prioritize students with exceptional need. So it doesn't have to be Pell students, but that's typically what they use. And then you can have grants to distance learners. Oh, here you go, surprise. Again, I think what they've said here is to carefully document, where's our dinger, your prioritization. So what is your policy? And let's not forget your internal controls when you're setting these policies. So I don't want your student financial aid director in a vacuum setting a policy. I want student financial aid to get involved. I want finance to get involved, and everybody sign off on the same policy and say, we're in agreement here, and we're not being discriminatory against any populations. You may not condition the receipt of financial aid grants on enrollment in your institution or continued enrollment in your institution. You cannot satisfy a student's outstanding debt unless it's written approval from the student. This is again on the student portion. And then you can't require consent as a condition of receipt of the grant. So you can't say you have to sign for this before you take them. You just give it to them. Okay. The question that, again, 1098T, we were all over the place. Are HEERF grants required to be reported on the 1098T? HEERF 2 grants, that's an important clarification. Oh, I'm glad you're here today. In the IRS FAQ number 6, which I think there's a link on one of the later slides for you, the question came up, is that required to be reported under 1098T? The answer is yes. For 2021, they should be reported in box 1. Okay, they do not have to be reported in box 5, and there's your link at the bottom of the slide. And They do not have to be included. I think what's confusing is they do not have to be included in students' income. Make sure there's no questions on that. Okay, HERF 2 institutional portions. You're to use the funds to defray the costs and expenses associated with coronavirus. One of the biggest changes here is that you could do lost revenue. We're going to dive more into lost revenue in a couple minutes. Technology costs with distance learning, faculty and staff training, and payroll. Again, there are some exclusions on payroll to remember. If it's an executive level person, they are excluded. You can use it for student support activities and then additional emergency grants to students. You cannot use the funds for. This list appears in every HERF, and it appears multiple times in the FAQ. So you can't do pre-enrollment activities, marketing, and recruitment. We're going to talk about re-engagement here in a little bit. That's considered separate. Endowments, capital outlays. Again, there's the senior administrator's salaries, so on and so forth. So just make sure that you're not using it for any of those pieces. All right, how do you plan to use HERF 2? Because I'm assuming most of you haven't gotten there yet or you're close. A similar way to HERF 1, additional student grant lost revenue. That's great. Still coming in. Good. If you're other, if you'll send us a little chat and tell us what your other is, that's exciting. Can't wait to hear. All right, lost revenue. So again, reimbursement for lost revenue is allowed under the institutional portion, and it must be associated with coronavirus. So what's important to note here is that if you were already planning to end a degree program, you cannot use that loss of degree program revenue because it was pre-planned that you were ending that program. If you were going to have a dorm shut down for renovations, you can't count that as lost revenue because it was prior to coronavirus. So again, anything should be specific to coronavirus. And again, it's important that it's well documented. How did you come to this decision that that's an appropriate use? So lost revenue sources can be either academic or auxiliary. Academic tuition and fees, institutional charges, we're going to talk more about that in a minute. Room and board, enrollment declines, there are specific methods you have to compare. We'll dive into those. Supported research, summer terms, and camps. So if your campus shut down last summer and you typically have summer enrollment, this could be a good area that you could calculate or use lost revenue. Here's all your auxiliary service sources. Each of these has a list of 5 or 10 things underneath of it as examples. So again, it could be dorms, childcare services, bookstores, parking revenue. They really expanded what you could use it for. Disruption of food service. So if you're no longer serving as many meals on campus, this could be a good opportunity to calculate that. All right, again, what cannot be lost revenue? Capital outlays with construction. You can't take your lost revenue. You can't say lost revenue is lack of contributions to the institution. Alcohol sales, the government's always anti-alcohol sales, unfortunately for all of us, or investment income losses. All right, so how do you report it? So on your Sifa for 2021, you can have lost revenue from March 13th, which is the earliest date you can begin calculating lost revenue, through June 30th, 2020. And then you can also have lost revenue from July 1st, 2020 to June 30th, 2021. There can be 2 different buckets. Even on HERF 2, although the award didn't come out until December of 2020, they count anything before that as pre-award costs. So that's how we're allowed to calculate all these things back from March 2020 into HERF 2 and HERF 3. Here's your options to calculate it. Year-over-year comparison, semester over semester, 3 or 5 year average. I would probably run through all these scenarios and see which one best suits you. You all are very smart. I don't have to tell you that twice. It must be accorded consistent treatment. So again, if your fiscal year is the baseline, then you should use your fiscal year. You know, auditors and accountants like apples to apples. So think about this. Everything we want here is apples to apples. And then be consistent. You cannot include, okay, this is big. No double dipping. The example here is if you were for some reason to get provider relief funds. Most of you probably didn't, but if you were, you can't use those funds and HERF funds for the same thing. I think the more applicable situation here is that if you provided room and board credits using HERF 1, you can't use HERF 2 and say, well, we lost room and board revenue because you've already recouped those expenses with HERF 1. Make sense? Here are some examples. I'm not going to walk through these, but I do think this came straight out of the FAQ. I do think this is a good opportunity that if you're trying to think about how am I presenting this, how's it going on my Sifa, how's it flowing through my financial statements, they have several examples for lost revenue that you can dive into. Again, it should be well documented. What was your methodology? What was the underlying data? What were your budgets? Who prepared it? Who approved it? You know, if you're using budget, go ahead and provide us the board minutes where the budget was approved when we're coming to audit you. Give us the things that say, yeah, this budget's legit, and that's how, because your auditors have got to get comfortable that the information you're using is sound. And again, no double dipping. All right, HEERF 2 reporting. When I made these slides, literally on May 10th and May 11th, they dropped the 28-page, 55-question HEERF 3 FAQ. I had to go back and change all this. They have said HEERF 2 reporting now follows the same as HEERF 1 and HEERF 3. There's quarterly reporting. Of course, we had no rules for quarter 1 and part of quarter 2, and so those reports are now due as part of the June 30, 2021 reporting period. Same form is my understanding at this point. Next week, they might drop us a new form, but right now I think it's the same form. Oh, and then we started to look at some reporting for the 2020 audits as part when we're wrapping them up. And so make sure that you have dates and some sort of audit trail for us to follow, because a lot of institutions uploaded the student in, you know, it was it's like a narrative on the website. It's beautiful. It's like we served 500 Pell students and they all got grants of $250 and it's amazing, but you were required to do updates on their quarterly, and we can't follow that there were quarterly updates. So if you put in some dates that say, hey, yeah, through December 31st, we served 200 students, through April, we served this many, you know, that would be helpful for an audit trail, and or you have a separate report that says, this is the information we're using, this is the date it was uploaded, here's where it ties to the website. Oh, here's the part where you have until June 30, 2020 to post the 2 retroactive HEERF 2 reports. And here's HEERF 2 resources. All right, moving on to HEERF 3. Any questions on HEERF 1 or HEERF 2? Okay. Making sure we went through that quickly. Okay, HEERF 3. What are your feelings on HEERF 3? Tell me, because I know how I felt about it. Do you love it? You can think of a million ways to use your funds. You wish it wasn't a thing. You're over it. You just don't really care. You're fine either way. I'm proud of you, Group C people, because I had strong feelings and I'm not really in it. But good. Okay. All right, so HEERF 3 came out March 11th of 2021. Again, it was an additional $40 billion available through September 30th of 2023. There's a specific allocation for each institution. So HEERF 1 was 50-50. HEERF 2 was the same portion of HEERF 1 for students had to be submitted out of HEERF 2. And HEERF 3 is a specific formula that says at least half of the funds are for students, but it's not exactly 50-50 because there was an additional allocation for distance learners that wasn't included. And so the numbers are just slightly different. Like I think I looked at 3 schools in the state of Kentucky. One was like $500,000 more to students than it was previously. Another one was like $300 different between student and institutional portion. So make sure you're looking at your allocation table for HEERF 3. Okay, the student portion requirements are the same as HEERF 2. They can cover cost of attendance and emergency costs that arise due to coronavirus. The student portion, again, same as HEERF 2. There's no eligibility requirements. There is no, the only thing that changed is that you must prioritize those with exceptional need, which is the same as HEERF 2. And then it also encourages prioritization of domestic students, which is when they clarified that DACA international students, Dreamers could be in. That's where they said anybody can get it, an international student can get it, but you should have priority to your domestic students. All right, exceptional need. Ding, ding, ding. It needs to be carefully documented. And that actually came straight out of the FAQ. That's not just me as your auditor standing up here. Please document things. That came out of the FAQ. And then you have individual determination per the institution, but you cannot have any minimum GPA requirements. No other, you can get your grant fund if you come play basketball for us. Nothing else ties to it. You do not have to have continued enrollment. And then it does not require the students to first pay any outstanding debt or balance. So you can't say your balance is $2,000. We'll give you $2,000 out of this fund, and then we'll give you additional grants, unless you get that in written consent. Yes? Would you think that probably get on board with that. Oh, I bet everybody at home couldn't hear that. The question was, would a past due balance note that that student has exceptional need? I think I could get on board with it. I'd really want to see your documentation about why you think that. Some documentation that says, we've had a history of students with a balance greater than $2,000 do not re-enroll and do not come to return, that could be a good opportunity. There's also some more clarification back in the re-engagement that I think that you could use too. Again, well documented. And don't everybody go to their auditor and be like, well, Megan said. Well documented, talk to your people. I'm happy to have conversations with anybody, but I could get on. I think that's a legitimate question and I think a pretty legitimate answer. All students are eligible as long as they've been enrolled during this national or global pandemic. Again, this lists out who is considered eligible. Okay, this is the most important part of HEERF 3 in my mind. There are 2 must-use applications from HEERF 3. You must use the funds to implement evidence-based practices to monitor and suppress coronavirus in accordance with public health guidelines. So it has to follow the CDC or other public health guidelines. And then you also must conduct outreach to financial aid applicants about the opportunity to receive a financial aid adjustment. So my student financial aid directors in here, don't yell at me. I didn't make this rule, but they're requiring you or some department to reach out to every student that received federal financial aid and say, you could have an adjustment to your EFC. There is no minimum dollar threshold for these activities. Again, let's be reasonable. If you said, I spent $1 sending out an email to a student and that's all we're claiming, I'd say maybe we should have spent a little bit more on that. Again, there's no minimum threshold, but you have to spend some dollars institutional portion from HEERF 3 and it should be well documented. Somebody asked the question, why would Pell Grant not meet exceptional need? I think those Pell Grant students are considered to have exceptional need. Why would Pell Grant only not meet exceptional need? Who's ever asking that question, will you call me tomorrow? Because if they've said throughout every document that if it is a Pell Grant student, that is typically, they're saying exceptional need, typically a Pell Grant student. So if it's Pell Grant, but that doesn't have to be the only criteria. Is that what they're asking, I guess? Okay, it doesn't have to be the only criteria. You could say here's another reason we think these students have an exceptional need. And maybe it comes back to Mary's question of, they have a past due balance of X dollars. We think they have an exceptional need because of that. That's why they're going to get, an additional fund. Yeah, I think, the question is just a note, or if you use a checklist to say, here's why I'm asking for an adjustment, is that enough? Or could you have a different letter could you have the student write a letter and say, this is why I fall outside these boxes, but I still think I need additional? I think you can have them write a letter that says the same thing. We're going to talk a little bit in a minute about how they receive those adjustments from that second must bullet point. But yeah, I think again, just making sure that everything is well documented. And if, if that's going through student financial aid or whoever's handling that, let's put an internal control in place. Yes, Megan's reading all these and determining who's eligible. Maybe let's take 10 minutes and have someone double check those and make sure that that makes sense. Yes, Mary. Remember where I said it has to be well documented? Yeah, it has to be well documented. I know that's not great. But I think, if you can get 3, 4, 5, however many people around a table and say they wanted to give you guys flexibility based upon your institution. So they didn't want to say only Pell students can have it, or, you might say, well, this group of students we have a nursing program, but they travel out in the state. And so they have exceptional need because now they are required to buy XYZ to fit in with the hospital protocols and they're not providing it. So you can sit down and say, okay, that's why we think, and here's why. I think, again, if it's well documented, they want to give the schools flexibility to be able to meet those needs of their students. But again, it's well documented. Let's have some people sign off on it and get on board. And you can always do it. You can call me if I do your work, or Dean Dorton does, or if I don't. I'm happy for you to call me and be a consult if I can. But they really did want to give some of that flexibility. And I think too, because states' requirements were different. So some states were still, masking, some were the Wild West. They could do whatever they wanted. I think that's why they tried to provide some flexibility so that way you could meet what, you might feel differently in this state versus Indiana. Other questions on that? Okay. For the monitoring, suppressing coronavirus, those funds can be used for testing, prevention, reducing barriers to vaccination, and supporting students. Again, they're giving you flexibility in these areas based upon your unique location. Again, well-documented decision-making process. If you go to the FAQ question 29, under each one of these 4 categories, it gives you 10 possibilities of things that you could potentially use this money for. Okay. Will your institution most likely spend your institutional funds from HEERF 3 on testing, prevention, reducing barriers to vaccination, or supporting students? Some of the supporting student items were mental health counseling, other types like that, additional grants, so on and so forth. All right, supporting students seems to be the major winner in reducing barriers to vaccination. Awesome, good. So kind of all over the place. Again, each bucket should be well documented and make sure that you have, you're not double dipping. All right, we're diving into some more of the FAQs quickly here. FAQ 3031, again, of the 55 they released, talked about direct outreach to students. This is where your financial aid directors are going to have to get involved. But there are 2 ways to make a financial aid adjustment. They can fill out the FAFSA change in financial situation, family financial situation, I believe it's a form, or they can go to the financial aid director, and the financial aid director has the ability to exercise what's called professional judgment. When we audit every year, we look through all the files we select and say, is there any professional judgment? Let's see what they documented about why they've adjusted the EFC, because the information used in FAFSA is 2 years old. So 2 years, thank you. And so the information can change, especially related to coronavirus. So there is direct outreach required under HEERF 3 to your student financial aid participants that says, hey, you can get your EFC adjusted because we know situations have changed. You can send an email. You can mail students something. I'm sure that would just be like tossed in the trash, but maybe it works. You can give them a phone call. They probably won't answer. I thought that was really funny. I'm like, no student's going to answer their phone like, yes, my college is calling me. They're going to be like, you owe us money, or give us a donation. It could be a webinar invite. So you could set up 3 to 5 webinars and say, hey, please join us. We're going to talk about how you get your aid adjusted, get more grants. You could have office hours, in-person meetings. Again, these are options that are included, but not limited to. So if you know you have a great event that this could work at, maybe a welcome back or something like that, or student orientation, over the summer, that could work. All right, reporting under HEERF 3 is the same as under CARES HEERF 1 and HEERF 2. I believe it's going to use the same form. They haven't released anything that said it would be a different form. All right. I thought this was interesting. They snuck this in at the end for the July 10th, 2021 quarterly reporting. It said you're also encouraged to submit your quarterly reports to the department. I thought that was weird. So HEERF reporting, have they? Okay, so send it in. More information to come on the annual requirement. So we're looking at the annual requirement wouldn't be until March of 2022. So we're a while away. All right, more HEERF FAQs. Any questions up until that point? Okay, thank you. All right, frequently asked questions. Again, this was published on May 11th. It included clarification and guidance to all HEERF funds. So It said HERF 3 FAQ, but all throughout it clarifies is it HERF 1, HERF 2, HERF 3. 28 pages, 53 questions. I've read it multiple times. I'm happy to help summarize now for you. I would recommend that you have a copy with you as you're making decisions because it does clarify quite a bit. All right, FAQ 22, unallowable costs. Applies to HERF 1, HERF 2, and HERF 3. Again, we didn't really have any guidance around HERF 1. HERF 2 had a little more guidance, and now for HERF 3, a year later, almost exactly, they have clarified quite a bit. Again, you still can't do pre-enrollment. You can't do marketing or recruiting, but they do have an FAQ related re-engagement. We're gonna talk about that. And again, if you fall all the way down to the bottom, no construction or purchase of real property except for minor remodeling. So what we've kind of been telling our clients is like, if it requires a permit, that's probably more than a minor remodeling. So we'd want more documentation. You know, changing some non-structural walls around doesn't, you know, you took a community bathroom to 4 separate bathrooms, that's probably not gonna require a permit. Probably falls under minor remodeling. So just use your heads on that one. Don't forget, I do believe gear funds can be used, state of Kentucky, for construction. So keep that in mind. FAQ 25 was payroll. Under HERF 1, 2, and 3, you can use it to defray payroll costs associated with transitioning to remote learning, defraying costs to hire more staff, expanding classes. They have to be costs that are newly associated with COVID-19, and they have to be incurred on or after March 13th of 2020. These funds can also be used to pay for internships and job experience trainings aligned with local coronavirus-related recovery needs. All right, let's talk about re-engagement. I thought this was one of the most interesting of the FAQs because they've said you cannot market, you cannot recruit, and you still are not allowed to do that. But under this, you can do an analysis and say, it's more harmful to the community if this group of students doesn't complete their degree. Therefore, we're going to do everything we can to re-engage them and get them re-enrolled. It falls into 2 buckets, retention and re-engagement. Again, we're seeing mental health help, any additional barriers that may have, you know, overcome. So you could do additional grants to students for childcare or things like that. Re-engagement, again, you can discharge as a complete balance of student institutional debt as lost revenue and reimburse themselves, including associated fees, penalties, so the students can re-enroll, continue their education, or obtain their official transcript and transfer and or secure employment. I think what is interesting here is that this is the institutional portion. You cannot use student grants without their consent. In this instance, you probably could. So Mary, to answer your question, it seems like yes, you can based upon FAQ 27. I would put that in your notes. FAQ 27 says this. This is why we believe this. Yeah.
Pick and choose with students and say, okay, we're only going to discharge the students that have a balance of $2,000 or less, or if we do one student, we have to do 100% of that student's balance, or and kind of go with an all or nothing because we don't want to quit by pay. We just try to pick which students we thought were re-enrolled or something like that. What's the safe way to do it?
The safe way. You know the safe way. Oh, people that at home couldn't hear. The question is that Austin P got together and said, hey, we want to do this, but can we pick and choose the students that we actually think will re-enroll and be successful?
That wasn't exactly what we said. It was like, can we just pick a certain dollar amount? Just do students that owe under a certain.
Okay, yeah. Can we pick students that owe under a certain dollar amount and discharge all their debt, right? Again, I think if it's well documented and you guys get on board and say, hey, the critical point here is $500 is keeping someone from re-enrolling, but we think that that's the break point where people are going to, as opposed to, we think at $3,000, those students are just like, we're out, college, you know, whatever however you split that down, and you can do that. I think several years ago, UK did a project like this, not using HERF funds clearly, where they discharged student debt. They did an analysis and said, hey, if it's $250, it's preventing them from re-enrolling, they would discharge it so they could re-enroll. So maybe it's based upon your minimum balance due for re-enrollment.
What about the want to be, again, as safe as possible. Okay, well, we'll discharge the max of $2,000, and you're gonna have to come back and discharge $1,000, when the intention of this is to help them get their POMA, get their transcript, or get reader audit.
Yeah, I think you're gonna have to do, again, some sort of analysis. And so maybe it's the $2,000, but that helps them get their transcript, because the whole point says that they can go get employment. So if you think a college degree is preventing their employment, then I would say the $2,000 balance plus not being able to get their transcript, that's probably a student that you could discharge pretty easily. I don't have a great answer for you. I'm sorry. You can't say that. You can't say that, but I need more money from you, and I need to be on campus and talk about it. Just kidding. Yeah, Mary.
Do they still suggest the max being the Pell Grant?
I haven't seen that. No, I haven't seen that.
You can do larger amounts.
I think so. I have not seen that. I'm sorry for people at home. I forgot to repeat the question. The question was, is the max you can do still the Pell Grant? And we haven't seen that, so we're gonna go with no. All right, we've already talked about this. You have 1 year after the most recent HEERF award. So even though CARES 1 is out there from March of 2020, it typically would have run out now, but because they renewed HEERF 3 in March of 2021, you have a year from then, and then you can get no cost extensions for another 12 years, another 12 months. So we'll be auditing this until 2024. With HEERF 3, you must draw within 90 days. I think this has been pretty standard in order to accept the funds. Okay, FAQ 42, 43, 44. This is what I talked about a little bit earlier about how do they get around, you have to have an award to have costs. So the HEERF 3 award was not until March 11th of 2021. But they say that you can use pre-award costs, so all the way back until the original date of the coronavirus, March 13th of 2020, those can all be pre-award costs that flow into HEERF 3, and you can use those on your Sifa. Indirect costs are allowed, and so are direct administrative costs, if they are crucial, I think is the word, to the administration of the grant. Oh, there you go, reasonable and necessary. I'd call that crucial. And again, it needs to be well documented. Can I give you an example of a reasonable administrative fee? Not off the top of my head. Because that also might depend on your institution. So if your institution has had 10 grant accountants, this is just another grant. You've got a bunch of grants there might not be a large burden, there. Yeah, I don't know. I don't have a good one off the top of my head. Let me think about it. I'll try to get you an answer. Okay, so I think this is really interesting. They finally said, because everybody's like, what are they going to do if we don't follow the rules? And we're like, we don't know. And so they have come out and said specifically, if you misuse the funds, you will be on heightened or more frequent reporting, monitoring, auditing, which is AKA no fun. You can be placed on route payment status, which means you have to get direct approval for every expenditure you have before you can draw down the money. You can be also placed on high risk status, which is not good because then you can be suspended and debarred, or you can be terminated, your HEERF grants can be terminated completely. So what does that mean? Use the funds correctly with all these vague rules. Okay, HEERF reminders. Here's where I'm working up to $100 here. Every decision should be well documented. Again, no double dipping. So that's why the well documentation, good documentation comes into play. We want to make sure that you're thinking year over year, especially as we get into next year when we're thinking March 2022, when we're saying, what have you spent money on? And you're saying, oh, well, we went back and did lost revenue. And then we're saying, well, we think you spent that on, we think you're double dipping here. Let's make sure throughout the process that we're not double dipping. Still apply your internal controls. So again, review, approval, observable approval if possible, and then create an audit trail because we are coming in to audit this. I expect this to be a major program for at least 21, 22, we might be able to get around it depending on how the rules change, pending you had no findings in other areas. But again, create an audit trail so that we can follow along. All right, questions on any of that? We're getting closer. I don't know what slide we're on. 74 of 98, we're getting close. HERF and the Sifa. All right, so the reporting of expenditures and lost revenue is independent of Gaap. So that's important to remember. If your Sifa is under, you need to determine if your Sifa is under cash or accrual basis. Most institutions are under accrual. And then in order to recognize expenditures, there should be an award. So that's where we were getting into the conversation about the pre-award costs. What's interesting is that the award date might not be that clear. I think in most instances here, for specifically for HERF funds, it's pretty clear. The award date is March 11th of 2020, December 2021, December 27th of 2020, and March whatever of 2020. And then just make sure if you don't have a clear award date, so if there are other funds that you're getting, so maybe gear funds or a different coronavirus fund, make sure you're documenting, we've determined the award date is this, and these are the funds that we can recognize. Timing of cash receipts has no impact on the Sifa, you all know this. And then there's a couple more requirements under HERF 1. Again, by the end of all the HERF periods, we're gonna make sure that HERF 1's funds were 50-50, HERF 2 funds were the same student portion as HERF 1, and then HERF 3 is based upon your allocation table. But that's at the very end of it all. Okay, if an existing award is subsequently impacted by a substantial amendment, the amendment would be considered a new award for the presentation of the Sifa. So just keep that in mind. That's why they're saying when HERF 2 came out, it said, oh yeah, you can use the rest of HERF 1 on lost revenue. Therefore, it substantially changed the award. That's why you get a year from the date of HERF 2. Here's a lost revenue example. Here's some resources, gear funds. We're not going to talk much about this, but this was based upon the governor's office. Each state had their own opportunity to use the funds. Gear 2 is coming, or Gear 2 came out too in December. I'm going to skip through this. I just put some slides in here that talk about what each state was using. I thought it was very fascinating, which each state was doing. Some of them passed responsibility out to the counties, that then passed it out to institutions, and so it's just all over the place. But that's interesting if you want to look at it. Student financial aid updates. Okay, here we go. Bread and butter, student financial aid. There are new rules coming into play on July 1st of 2021. So if a student withdraws after July 1st of 2021, there are new rules. We have some student financial aid directors in the room and on the call. If your student financial aid director is not here, please check with them and make sure they have attended some sort of training on these new rules. It has to do with modules, how you're returning funds, the definition of academic attendance is changing, and a couple other things. I'm going to be completely honest and transparent. I have not dug into these that much because I've been dealing with HERF, much like you all. So make sure that someone on your campus is aware and making these changes, because it's not inapplicable at the end of the year. Like this, it's July 1, it starts, and it can impact your summer. So keep that in mind. Here's all your academic engagement things. Basically expands the definition of academic attendance. Okay, if you're a private institution, I think I have like 1 minute left. If you're a private institution, new financial responsibility ratio should be in your 6/30/2020. Financial statements, super fun. Yes, they have to be that long. Yes, they add 4 pages to your financials. It's all required. Sorry, it's not my rule. We at Dean Dorton have basically prepared those for all of our clients, mostly for June 30, 2020. After June 30, 2020, we will no longer have the information to be able to prepare them. We're planning a webinar for later in the summer that goes over how you, empowered clients, can prepare those schedules, and we'll plug the numbers in. Okay, questions? Yes. Yeah.
On the outreach to students regarding professional judgment, those types of things, we have to spend a dollar amount, even though it's not told what dollar amount we have to. Can we spend money on like digital marketing?
Digital marketing to tell students that they can receive a financial aid adjustment? Oh, sorry, the question was, is can you spend, you have to do that must part of the reaching out to students, direct outreach. Can you spend that on digital marketing? I would say yes, but that might not be your safest bet. I would do that in conjunction with something else, because it says direct outreach. So to me, that requires a student to click on your website and see the banner that says, get a student financial aid adjustment, as opposed to an email to them that they may ignore, but it is more direct. So I would do it in tandem. I think you can. Right.
So we tried, if we're gonna give aid, in that sense, using 1, 2, 3 of her, that's got to show some kind of need and prioritization.
Right.
If I'm just giving $1,000 scholarship, that's out of my scholarship funds, general fund,
Right.
fund balance, wherever that sits.
So, oh, go ahead.
I've tried to be very conservative with that, because what you just talked about, look up the definition of advertising and marketing. That's to the max. You don't discriminate versus outreach. You've got a need because I've either written off your balance, or you've got a payroll need, or whatever it happens to be. I've got a list of those people. I know who they are.
Right.
I may have others that have a need, but I don't know. I guess we've taken a very conservative approach since that website's open to the world.
So you're saying it, you all have put it on your website that you could get, no, you have not. And I'm not, I would think that that would be a bad approach, that to put it on your website and here, get money. I would agree with you all on that. I think what she's saying is that for the direct outreach under that must, is that direct enough to put it on your website to say you could get a financial aid adjustment if you talk to us? I would say no, that's not enough direct communication because it said it needs to be direct to the student. So I think in that instance, a general email to all 10,000 students that said, hey, if you get Title IV aid, you could get an adjustment. Or if you're not eligible, you could get an EFC adjustment.
That's why I use lost revenue. Lost revenue is focus.
Mm-hmm.
I cleared your debt. Separate email. Megan Crane gets, Megan, this stimulus funding, there may be dollars available. Please apply, hit this link, please reach out to student financial aid for funding. Separate.
Sure.
Two separate emails, not related.
Okay.
I try to keep them very mutually exclusive.
Okay. So you're keeping two separate pools of ones that you've discharged the debt and then others where you've said you can apply and get more funds.
Right, so I may,
Okay.
that group that I just discharged the debt may be in this other pool that I've done the outreach with because they've received bail, they had, family earned, family contribution of, I don't know, 0 or whatever happened to me. But I've outreached to them separately from.
Yes. I think students can fall in multiple buckets. Yes. Any other questions?
Yeah, Megan, on the 90-day requirement on HERF, on the ARP funds, or HERF 3, to draw down, that's how, I guess it's how we let them know that we're accepting it.
Correct.
We approached the first two like we would have had any, we did it on the reimbursement basis, just to be sure.
Mm-hmm.
A couple of us wanted to make sure that the funds were actually allowable before we drew funds down. Are we supposed to draw the entire balance down, or we just have to have something drawn down?
I think you just have to have something. The question is on the 90-day requirement to say you've accepted HERF 3, I believe is just start drawing so that way they know you are accepting these funds and spending them.
But based on something that you talked about earlier, or it was earlier in the discussion, can we, or actually I think it was in the guys meeting today, are we allowed to take these on the advanced basis, draw the entire amount down on the advanced basis, and just record them as a liability, or what would have, a long time ago, I recorded as deferred revenue, unearned revenue, and then recognize the revenue as we have it qualified as expense.
So the question is can you draw them down on an advancement basis and then record them on your books as liabilities or deferred revenue? I think you can. I don't think I would.
Well, if you did, we'd have to do something to track any interest earnings on it.
Technically, although cash management is not an audit requirement, the cash management rules still exist. So if you did draw the whole balance, anything over 100, 300? I can't remember. Interest earned on it greater than a certain dollar amount, I can get that to you, has to be returned to the federal government. Throughout the FAQ, they talk about it being on a reimbursement basis. So that's why I think if you just draw a small part, and again, I think they're wanting you to say, we're drawing these student funds and getting money to students. They don't want you sitting on the student funds forever. So I think that's how they're thinking, okay, we've said you've got 90 days. You might not be ready to spend the institutional portion yet, but the purpose of these is to get some money to students. So that's why they want you to start. Any other questions? Y'all didn't think I could do 98 slides in that amount of time, did you? All right, if you ever need anything from Dean Dorton, feel free to reach out to us. Again, we'll be having more webinars, more newsletters.